slide.
Sure.
All yours.
Well, you can go right ahead right now. This
Okay.
was in the meeting announcement of what the objectives and agenda are going to be. So we'll just look at that for about a second. And at the end of this, you can tell me if we've met the objectives. On the next slide, no good presentation from a consultant would be complete without a disclaimer of any sorts. And with these disclaimers, I'll say, John, we can go ahead, is that, this is a lot of good information, but don't count on it for anything that does not establish a relationship. And if you need help, you should engage somebody, and all the stuff that you've come to know and love. We're going to jump right into the polling question, John, if you put that on the next screen, and let's see where ESG lives in an organization.
Okay, yeah, so everybody has access to the polling questions. They can answer it now. Unfortunately, I cannot provide you with the live results because I'm not able to access Pathable at the moment.
I can do that. Don't worry.
Thanks, Dina.
Yep.
Well, the next slide has the polling questions, so we
I'll
can
bring
flip
it
to
up.
that and they can see what the options are.
Okay.
And while people are voting, I have to tell you that in the last couple of days and hearing people just talk about their backgrounds, I found it fascinating. And nobody can hold a candle to Janitha, but everybody was interesting. And I thought I'd take, while we're polling here, to share a little of mine. You've seen me around for a long years. My career started at a chemical plant when a lot of EPA and OSHA regulations were coming out and nobody else wanted to deal with them. So I became the compliance engineer, and when they found out I could write a coherent report, my career was started. A couple years later, I was transferred to corporate headquarters just in time for hazardous waste and OSHA regulations to come out. In the environmental world, there was no hazardous waste before 1979 because it hadn't been defined. So I was given a list of 28 chemical plants and an air travel card and a Federal Register about this thick, and my boss said, figure this out. And I did. I was in-house the day Superfund was passed and was working on property transactions and business transactions and divestitures within 6 months. After that, not long after that, California beckoned and I came west and began consulting, doing site assessments, and I was an outsourced environmental reviewer for a major California bank. I developed and taught in a certificate program for environmental auditing at UC Irvine Extension in the late 1980s. And was teaching second line of defense way back then, doing all different kind of specialty audits for insurance companies and litigation support, both testifying and non-testifying. So that gets us about halfway through. What do our polling results tell us now?
Yes, so it looks like I don't know, or not applicable, came in at your highest percentage at 32%. Compliance is the second highest at 20%. Yeah. And operations is coming in third at 13%.
Okay, so the point there, I think, is that really ESG is really no one thing, which is, we've all heard, so it's no surprise that it lives all over the place. A big component of this, as you've heard from me before, is that it involves a lot of reporting. So we're going to move right into another polling question on what kind of disclosures or reporting does your organization do? And I'll do the second half of my background while these are coming in. I landed at PwC in 2002. I landed 1 month and Sarbanes-Oxley was passed the next. So that was a very interesting time. An engineer reading accounting rules and learning about contingent liabilities and asset retirement obligations and disclosures and balance sheets, and working with external auditors and internal auditors, being on the ground when COSO Enterprise Risk Management Framework came out. And when I saw that lovely COSO cube and I saw reporting, I saw, well, there's financial and non-financial. So been working at that ever since. I wrote my first sustainability report in 2002, which is a while back. In 2005, the SEC did a consent decree with Ashland Chemical because they had gone awry through a whistleblower hint on their environmental reserves. I did an independent audit for them, and it was my first exposure to whistleblower. There's always reorganizations. I became did not survive one and became an involuntary entrepreneur in 2008. I've been working on ESG and sustainability and management systems ever since. I got on the conflict minerals bandwagon in 2012 and built programs around ESG and supply chain and third-party risk, and did independent private sector audits. Oddly enough, an external assurance engagement using Yellow Book based on IIA credentials. So that was fun. And for about 3 years, I was very privileged to join the Volkswagen Monitor team, working for a team of attorneys on behalf of the DOJ, spending a lot of time in Germany. Been active in the IA in Orlando because this is really, I think, a growing area, and I just like putting different kind of puzzle pieces together. So I am able to look at the responses here. It looks like a wide distribution, but really not a lot of people. I think the top vote getter is about 13%, which surprises me a little bit, and I would be willing to bet that in another year or two, those numbers will be going up substantially. So John, let's go to some of these standards and frameworks. We've heard from me on reporting frameworks a number of times over the years. There's so much going on, and there's a lot on my website if you want more of a basic primer. One of the big things that's happened is there's been such a proliferation of standards and a call for many of these to sort of start aligning, as we heard Anthony say yesterday. SASB and the International Integrated Reporting Council have merged. The SASB CEO has taken the lead of that organization, which I think is a really good sign. SASB had by far, in my view, the more mature approach to identifying and coming up with reporting and disclosure standards and topics aligned by industry sector. They have a symposium coming up, which I'm registered to attend, so I'll stay current with that. Earlier this year, International Financial Reporting Standards, the IFRS board, they've signaled that they want to get in on the act on putting together disclosure requirements. You may know that the EU has a non-financial reporting directive, but didn't really say what to report or how. So many countries in the EU and companies in the EU have looked to SASB for the standards and guidance, and it looks like that could start to align as well. The next slide shows a couple more. The Global Reporting Initiative, now the GRI, was really the first kid on the block. I consider that to be the most comprehensive taxonomy of ESG topics that can be of interest to any group of stakeholders. Like many of these standards, they're updating, and there's a brand new set of universal standards. The GRI approaches this so that many topics are considered mandatory if you want to say that you report in conformance with GRI. The universal standards have added these topics here in human rights and materiality and governance. And there's some other things that are voluntary if you elect to report them to meet the needs of a particular stakeholder. The Task Force on Climate Change Related Financial Disclosures was just started in 2017. SASB focuses on investors, TCFD focuses on investors, but narrows the field to climate change related disclosures only. Because climate change being really the issue of our time, it just focused in on those, and you can see the 4 components of these governance strategy. What are you doing about climate change in your organization? And interesting things there is that the disclosure requirements go outside what I would call the 4 walls of a strict control of the organization, and require companies to add information on how they're engaging with supply chain and value chain, and even end of life of their products or services. And some of these voluntary standards are not so voluntary anymore because they're being adopted by countries as being mandatory. So if we move along, I have some perspectives on these, just kind of the big picture. So what there is really a sentiment to align many of these frameworks, and investors are really driving the bus right now. I think that's useful in one way, that it gets everybody's attention. I think it's less useful in another way because other stakeholders are kind of getting lost. There's a lot of B2B ESG reporting going on to customers, to insurance companies, to trade associations and the like. And that has kind of disappeared from the radar screen because investors are so prominent. But those do pose their own risks, like losing customers. So I think those really should be considered. And there is general support on external assurance for the content of ESG reporting. I think that's kind of interesting. Everybody wants confidence in it, but I'm not sure assurance of what and how will that be done. TCFD disclosures include some forward-looking statements on what companies' programs are and what their plans are and what their objectives and targets are. I have a hard time wrapping my head around how you do attestation engagements on forward-looking statements and plans. So that's a good example of how the market pull is very powerful, but the underlying systems and controls that go into those disclosures, in my view, are still emerging. So I think the pull for assurance is going to require companies to pick up the pace and develop more mature systems and controls. Climate change is really the issue of our day. There's some pictures on the next slide that are familiar to anybody who has picked up a paper or watched the news. SEC has been busy on climate change for some time. In 2010, they published statements on review of climate change disclosures, and that didn't really get traction. So in the last couple of years, SEC has doubled down more on climate change and ESG issues. They're looking at some ESG and some eco investment funds that maybe aren't all they're cracked up to be and may be mislabeled. There was a request for climate change disclosures earlier this year from the SEC, and they got over 600 comments. Now, the next slide, here were some of the things in those that request for comments. I've just highlighted a couple things here that are interesting. If you look at that last one, you know, should the management report on internal controls and financial, there's some things in here that just beg for internal audit involvement because they look so much like what internal audit has done for financial reporting in all these years gone by. So the next slide will show us what some of the things SEC Commissioner Chair Gensler made some prepared remarks just about a month back. They have looked at the comment letters, overwhelmingly demanded. They've looked at some of the disclosures now on the books and seen they're pretty much boilerplate and not very helpful. So they've signaled that the SEC will propose rules by year end. And it's anybody's guess what that'll include, but it's pretty obvious that it will align in many regards with TCFD, and it's anybody's guess when that will start. But as I work with clients on doing some of the things there and developing this, these are the kind of disclosures where the underlying information cannot be pulled in a week, that the program really does require some effort to build. So my perspectives on this next slide is that, you know, there are more studies by more agencies. This is not just SEC. You can see a couple other agencies there that everybody's looking at how climate change will affect them. It'll affect everybody. Next, we look at federal acquisition regulations. They are looking at disclosures for all kinds of ESG topics. And the next slide, we see that climate change is an interesting representation. We have a little animation game here, so we'll click ahead. If you receive more than $7.5 million of federal contracts, you have to answer this question: that you do or do not publicly disclose GHG emissions, that you do or do not disclose a quantitative goal, and if you check does, where can we find that? So if you look at this, this has been in effect for a few years now. And with all the attention on it, there's more attention on this now. So people can look back a few years and say, well, how did you answer this question anyway? And where is that link? Does it still work? And did you actually do what you said you did? In my experience is that oftentimes people filling out these questionnaires know what the correct answer is supposed to be, but they don't know what needs to be on hand to back it up. So I regard that as a risk to organizations. So that's been the quick cook's tour of climate change. So we'll ask folks now what you think the biggest climate change risks in your organization. And here you get to pick one. And we're getting a nice distribution of risks. So everybody's getting a vote. Lack of goals and targets is coming in last. And that really does not surprise me, because you can't have goals and targets if you don't have an organization, and if you don't have a strategy, and if you have not identified risks. So this is in keeping with what I see out there in the profession. And actually, I'm pleased that most people are responding with an answer. So that tells us that we all have a lot to work on here. In terms of perspectives for all the ESG issues, climate change is really the single item getting the most attention. It affects every organization in some way. We hear and we see about the extreme weather events, which I would suggest is a point in time. Climate change is a bigger, slower moving organization that is much more enterprise, if you will. There are regulatory risks, there are adoption risks, there are operational risks. And the disclosures, as I mentioned, include forward-looking statements. And an organization should really think about those forward-looking statements, because they will be held accountable for them, especially the forward-looking statements and disclosures to the SEC. A GRI report, a marketing puff piece is one thing, but submittals to the SEC are something else altogether. So there's a few perspectives on climate change for you. And with that, we'll go into the next little section. The US federal government has been busy on ESG. We think of government as a regulator, but the government is also regulated. Some of our friends here on this meeting from LA County and City of LA know only too well that if you have a fire department, you have fire stations, and you have issues about ESG and environmental and diversity and equity and inclusion. You have health departments, and there's so many things that government does that is regulated: streets, lighting. So the government is in the position to issue regulations. The government also has agencies that have to implement all these requirements, and they must identify and monitor and deal with these risks. So let's look at some of the next slides. There have been a series of executive orders on this for the last 10, 15 years. And I just call your attention to the fact that this really did not start and stop and toggle on and off with changes in administrations or parties, that there were substantive actions for the last 12 years, maybe a little different actions or different topics, but the ESG bandwagon did not stop in its tracks. It continued, and it continues still with some more executive orders. Next slide. That President Biden wasted no time on in the office when he got into office to issue executive orders to hold polluters accountable, reduce greenhouse gas emissions. All of these are just really emphasizing the importance of these, and we'll see how that plays forward in a couple of slides to come. Let's go. The executive order. One reason companies have been slow to respond to climate change and reducing emissions of greenhouse gases, notably CO2, is that essentially there's no cost. It's free. So there have been discussions about imposing a carbon tax that's been tried in the EU and didn't go so well because the cost of the tax, the carbon emissions just went so low as to be not really a burden. So now we're looking at social cost of carbon and there's an interagency work group. And look at all the agencies there. We have Commerce, Agriculture, Health and Human Services. It's not just an environmental issue. It affects people and entities and parts of our world that are governed by all of these agencies. So they're all looking at the effects of climate change, carbon emissions on their purview, and they're expected to come up with a social cost of carbon that the government and companies can start factoring into how they look at carbon emissions and where they make their decisions on an ongoing basis. And there's supposed to be recommendations for how this social cost of carbon is embedded in budgeting and procurement at the federal government level by now. I haven't checked on that, but that shows you an interesting way this is all going to go. The National Defense Reauthorization Act on our next slide shows that they are also considering climate change. The Defense Department is supposed to identify the 10 Coast Guard facilities most impacted by sea level rise. So think ahead about where this is likely to go. If there are 10 installations that are going to be underwater in 10 years, and it takes 8 years to relocate an installation, there are going to be some towns and communities that will be losing a lot of jobs because you can't guard the coast if you're underwater. So this shows an example of how the government is thinking ahead and has to plan for climate adaptation because as the globe warms, water expands, sea level rises, and the coasts are in jeopardy, including these installations. Okay. There is some social accountability provisions. It's not just environmental. There are some social accountabilities. We hear about diversity, equity, and inclusion. That's right here in the Defense Authorization Act. And let's move on to, we want to have some time for questions and answers. The GAO did an audit last year, a couple of years back, on disclosure of ESG factors and options to enhance them. I've seen some discussion and questions in over our sessions in the last couple of days on how would you do an audit of ESG? Well, here's one example. I think it's just you apply standard audit practices to identify the risk, to come up with objectives, and here's an example of how the GAO has done it. The next slide provides highlights of their efforts. There are a lot of things here that look familiar. They came up with a sampling strategy. They identified some factors. They gathered some evidence. They looked for the kind of things that would provide useful evidence. SEC filings you've heard of ad nauseum almost. Proxy statements are another interesting place to go for what are the trends and drivers on what investors would like to see disclosed. So that was a pretty good move to go look at those, and they did interviews. So all this has the same look and feel for the audits we know and love so well. The next slide shows kind of what some of their conclusions were. This began with their objectives on what is it we're trying to accomplish. So they came up with a family of suggestions that can be done by the government, a family of options that can be done by the private sector approach. So, some tips for anybody contemplating an ESG audit. Just go back to your risks. SASB and some other places are a good place to start to find with what your risks are, to establish clear objectives. I really encourage folks, auditors in a field where maybe they're still learning their way, to go heavy on the planning, to do the right audit and get the right kind of information like proxy filings. It helps as a shameless plug to have a specialist on board to direct you to some of those sources of information. And don't try to boil the ocean. Just do an audit that's reasonable in scope, as the GAO did. And if it's not in the audit, well, then we do it next time, or you do something else about it. And don't forget the important role that internal audit can play in advisory engagements. It doesn't have to be an assurance engagement. And I'm a proponent of advisory engagements for new and emerging issues like this. So another driver on this is that people want to invest their money in issues that in places where it's green or environmentally friendly. That hit a little pause button there during the Trump administration, but that's back. California, CalPERS and CalSTRS, the State Teachers Retirement Fund in Connecticut and several other states have been very prominent in the push towards green investing. There's been an interesting story about an ex-employee from Deutsche Bank now kind of alleging that the green funds are really not all that green. The SEC is on that bandwagon to look at what some of those funds are and to ensure some truth and labeling. Okay, if you're in the government supply chain, this is coming to you. That look at all these agencies here, look at all the things that will require disclosures and commitments and actions. If you sell to the government, it's my experience that if you don't sell directly to the government, take a couple looks down your value chain, you might sell to somebody who does sell to the US government, and this will eventually work its way back to you. We're going fast, but there's a lot going on, and we only had 50 minutes, so this is just really hitting the high spots. Environmental justice has been around for a while. We can think of the battery recycling plant here in Vernon, California, had a lot of exposure in the press here recently. It was had a long history of compliance violations. They continued to operate. They were not assessed meaningful fines and penalties. And it was lead contamination, for crying out loud. It was not an exotic pollutant. It was not something where the community and the authorities didn't understand what lead does or how it spread. It just happened to be in a community that is poor and predominantly of color. And there's a lot to be that connects that with the reason that there was no enforcement or action taken. So environmental justice, there's a definition on the screen here. The next slide will show what some of the things we can expect to see on environmental justice. What is a disadvantaged community? That will be defined. All the programs you see here, not just pollution, but access to clean water, access to efficient transportation. All these things are considered within the purview of environmental justice. And the next slide shows a couple of the things we can expect, that there will be some calculations and methodologies of benefits. There will be stakeholder consultation with a lot of outreach, and you can expect that the stakeholders will respond. There will be reports. So all of this will be done in a transparent manner. And there will be pilot to maximize the benefits of environmental justice to pivot towards directing environmental cleanups and all kinds of resources with environmental impact in a more equitable way. And with that, we're going to take a pause for our next polling question. Here's our poll. We covered a lot of federal efforts. So which of the efforts do you think will affect your organization in the next 3 years? Let's see what people are saying about this one. Okay, from what I'm seeing, it's a pretty even distribution. You're allowed to answer as many as you like, but the number of responses is a little bit low. I'm surprised that the top vote getter is still only about 18–17%. I think if we ask this question in 2 or 3 years on what has affected you in the last 2 or 3 years, I would not be surprised if these numbers are higher. But it's interesting to see that everybody is kind of looking at a different topic. So that's another data point, if you will, that ESG will have different impacts on different organizations. And we just have to find our way. One of the things that's very different about the last year or so about federal government actions is that it's really a whole government approach. In prior years and in prior initiatives, when it came to ESG or environmental, that was given to the EPA, maybe to the Department of Energy. But now if you look at some of those slides on all the agencies that are involved, it's recognized now that ESG cannot be boxed into the EPA, that it really does affect everybody. And there's a comprehensive agenda on many of these topics. A lot of times the correct answer is obvious, but what it takes to support the correct answer is not obvious. And I've also seen that the folks who are providing those answers might be in sales or quality or someplace that does not have access to what it takes for those answers. So back to the question of where does ESG live in your organization? It doesn't really have a home, but it affects so many places in the organization, and people do have roles and are taking ESG actions that affect the company, and they may not realize what those risks are. Okay, so now what? Internal audit to the rescue. If we go to the next slide. Oh, before that, let's see what does the board want? So they have some expectations as well. We'll see on the next slide what some of those are. Here's some of the expectations of the board. Protiviti did a survey. Here's the top 10 risks. And I usually see ESG hovering about 7 or 8. It's never the top one, but they're hearing about it. You know, the next slide shows some ways that the boards are hearing about ESG. They have captured a couple seats on ExxonMobil board. Of all places, there are investor pressures for reporting and disclosures. The board is hearing from the Big Four, from the World Economic Forum, from proxy filings, and you can hardly throw a quarter without seeing some thought leadership on this directed at boards from auditors and law firms and professional services and professional organizations. Rather, the NACD has done some, the IA has done some, so the board is hearing this loud and clear. So Protiviti last year put out a pretty good survey on 10 questions the boards should consider, which we see next. So there are a lot of questions the board should be asking about ESG. If we go ahead there, John, here's some questions. We have a little animation there. So what are the questions that boards should be asking? And if we hit the button again, the pop-up will come, well, we know what the boards should be asking, but I'm not sure the boards know what answers to look for. And if the boards are asking the questions, I think, well, who are they asking? I would imagine internal audit should be part of that equation. So how should internal audit anticipate these questions? And some of these issues should be supported by second line of defense auditing programs. And how should second line be stepping up to the plate and providing information that can work its way up, maybe through internal audit, to the board. So I think there's some opportunities there on those last couple of points. And I have some nice blog posts on those there on my website, which you can find. Now, as to internal audit, how can internal audit come to the rescue? I think we can. I think we should. I think there's a way for us to be a trusted advisor in this role. So before we get onto that, let's see what internal audit is doing now. Let's go to our next polling question and see what is internal audit doing now when it comes to ESG. Let's see what comes in here. Okay, so since the last time we asked this question, I've asked this question now in this is the third venue, one at an LA conference, one at an ESG symposium the IIA put on in April of this year, I think. I'm pleased to see that the number of respondents who say none is going down. The number of respondents who are answering the first bullet point, review of internal controls over non-financial reporting, is going up. I've seen that as low as 10 and 12%. Right now we're seeing at about 25. I'd be very interested to co-present the next webinar with an internal audit department who has answered it, that first response. I think that's exactly, frankly, where everyone should be heading. And I think that really internal audit can serve multiple roles here and maybe not limited to any of those. That review the internal controls, engage with second line, bring the issue to the attention of board and management, take a proactive approach in understanding what the risks are and convey them and be prepared to answer some of those questions and the next questions that will involve. Those will not be the last questions you'll get from the board. So what are the roles? Here's some of the roles that we can play. I think assurance readiness with the tug for assurance from the external financial auditors. I think the demand for that is outpacing the ability of organizations to really be ready for it. So there's a gap there. I think internal audit can play a significant part in closing and adding value to the entity. You can do a standalone audit. You can do add an ESG component to other audits. I think there's a lot to be said about advisory engagements on a spot basis. We heard earlier in the conference this week about the value in leaving room in your budget to do audits or exercises at management request or at the board request. So engage with discussions there and see what are their questions, where the rigor that internal audit provides can add some value to the organization and step up and really show yourself to be the trusted advisor in an area where really everybody is grappling to figure out what should we be doing. Well, internal audit can help set up those guardrails and see to it that the organization is staying within those guardrails and helping to achieve some value. So some closing perspectives on internal audit. I haven't really seen a lot of internal audit departments taking the roles that we're now seeing. 25% are getting involved with the internal controls over non-financial reporting. I think internal audit is really maybe a little groping for direction, but you're in distinguished company. Everybody is groping for direction. So it's really a good time and a good topic for ESG to take some leadership roles, and internal audit to take some leadership roles, and internal audit can really be a hero here with that white hat we saw on the earlier slide. And here are some of the perspectives, the topics where internal audit can really come to the rescue. And if you wait a year, our closing slide here will say that if you wait a year, you can either get on the train with everybody there on the top left, or you can walk confidently and get on the car you want and go to the destination you want, or you can miss the train. So I'd like to see internal audit in our, we like to see the top right quadrant in a lot of things that we look at. I'd like to see internal audit really be the hero and the trusted advisor in ESG. And I think the time is right. And the fact that it has come up so much in the last couple of days, I think is an encouraging sign with the interest in the uptake. So I think we can do it. So that's a lot